So the tides continue to turn within the crypto markets. Bitcoin now trading at $63,000, and we are at a major turning point within this particular market cycle. We're going to go through what the best trade opportunities are in today's show, as well as a whole lot more. Make sure you smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. It's going to be a very, very quick show. Let me know in the comments which coins you are looking at. You can see Banter Bubbles on the hourly is attempting to bounce. This is following a small pullback yesterday. You had the dailies closing red on a lot of the coins, which is expected, right? When price is attempting to break out of key levels, it is expected that you will have some chop at those key zones and have some sort of a pullback. So we're going to go over the pullback levels where you could be looking to gain an entry on some of the major coins. So let's get into it. Bitcoin at major levels. This is the SR flip level, and we want to see high time frame closes at the zone. And you can just imagine if this were a 5-minute chart, any closing candles that occur above this whitish gray box over here, which is pretty much exactly where we're at 63,000, would be incredibly bullish, right? That would signify continuation of this move to much higher levels. And we've spent many months here. This is most notably a 2-month candle chart. So 2, 4, 6, 8, and 10. This is almost an entire year trading at a key zone. Now, horizontals are very, very significant trading. So if you can flip that horizontal, it's much more significant than anything else, than indicators, moving averages, diagonals. Flipping those horizontals signify a shift in momentum, as well as a shift in the psychology of the market. Gaining acceptance above this level will most certainly drive price up for the final phase of the bull market. So that's what we're having a look at over there. And we're also attempting to reclaim some key and important moving averages and EMAs. This is taught, of course, in Whale School. This is actually a slide directly from Whale School. You can sign up using the link in the description below. By the way, how much time do you have left? You have 4 days and 5 hours left to join into this cohort. I've lost track on how many we've done. I think this may be cohort number 9 or 10. So the EMAs and MAs that I'm looking at is the 21, the 50, and the 200. These are typically very important when you're about to move into strong trading moves, which looks to be the case, right? As soon as we start to break out above these key zones, this would create that SR flip, the support resistance flip. So flipping prior resistance into support. And that's where these start to become significant, trending above those key moving averages. Right now, we're above the 21 exponential moving average, which you can see we've struggled with for literally a number of weeks. We've spent 3 months attempting to break above and below, confusing both the bulls and the bears, and considering the time factor, which has been more than 6 months within this trading range over here, the expectation would be the next time we leave one of those important either support or resistance levels, we should be leading into the next major move. Now, the things that you're looking for over here is closing candles above these levels. If you can see Bitcoin close, so even if we do pull back over the course of the weekend, so long as we're closing above 60,700, 61,000, somewhere around there, that creates a wonderful opportunity for bulls to continue to take control leading into next week. And we know that seasonality-wise, October is typically one of the best months within crypto, especially following the halving cycle, which is just being complete. What is the halving cycle, you ask? The halving cycle is where the Bitcoin mining reward gets divided in two, and that happens in a program fashion every 4 years, right? So we've seen that. Now, you also have the stochastic RSI, which is crossing towards the upside. And this has also chopped the bulls and bears around for a number of months, ever since pretty much May, when it reached the bottom. We spiked back up, came back down, spiked back up, came back down. And consequently, you're looking for a big move out of this region because you've had a major reset on all of the various different momentum oscillators. And you actually even have the possibility to be printing bullish divergence on the lower timeframes, which we'll get to in just a moment. And if that does actually occur, that should be enough momentum to get the stochastic RSI rallying on up and price breaking above the key levels. I have 68K as well as the final line in the sand for the bears, where they'll be looking to defend that zone, and bulls will be looking to take out this lucid SAR, which is the little asterisk traveling towards the downside. Other key moving averages on the 5-day time frame is going to be the 30. Well, if you look at the price action right now and we simply turn off the price and just look at the MAs, we have the 3, the 9, and the 30. You have the 3 moving average crossing back above the 9 and the 5-day, which is pretty significant. If price can get back above the 30, which is where all the rejections have happened, you can see this governed the entire trend towards the downside. That's where you'll start to see those strong trending moves, just like we saw over here, right? We want this posturing yellow above the green, above the purple, all angled towards the upside with price holding above that. And that's where you get those big moves towards the upside. So we're still waiting for that over there. We are coming into resistance. I did outline this to the Whale Room private Discord community yesterday as a significant zone to watch out for, coming into the 200 MA on the daily time frame. And this breaks your structure, right? So there is undoubtedly a lot of resistance coming into this zone, which is why it's no surprise that price will pause within this region and even possibly pull back, right? If you do get pullbacks into some of these lower zones around that 61 to 62 gauge zone, that becomes an area of interest where you can start to look to load up. We'll get into the 4-hour time frame in just a moment where I'll cover those exact zones where you can look to gain your entries. But right now, we have the EMAs postured towards the upside. This is just an important zone that we need to start to break above. And if we do, you'll see Bitcoin rallying quickly. You'll see sentiment come back. Yesterday, the fear and greed was sitting at 54. Today, the fear and greed is still at 54. So very neutral in terms of the sentiment. Greed kicks in when you break above these key levels over here. And you know how quickly risk returns back to the market when greed comes in. It tends to shift the tides very quickly. So we'll keep an eye out on that. My best guess and expectation over here of what's likely going to occur is we're probably going to chop around between 61 and 64K for a little bit longer, maybe into sometime next week. And that's probably where you're going to reattempt to break above these key levels. So maybe a little bit of a slow weekend over here. At the end of the day, the plan has been to perfection, where we've played out this consolidation, which we said was going to be 4 to 6 months. And we're looking for acceleration into the yellow box region over here, which is taken from multiple different zones, right? Number one, we're looking at the 6-month mark, which is the vertical line running down the screen. And number two, we're looking at 160 days post-halving is where you see the market rally up. And number three is we're looking at the prior cycle low to the point where you started to see major markups within the market. And that was 680 to 685 days later. And basically that puts you at a worst case scenario into October. October is where you should start to leave this trading range towards the upside. And you should see rapid price appreciation onwards and upwards. So we're looking at that over there. Now, if prices do pull back over the course of the weekend, what are the levels that you should be looking at? Well, I've got it for both Bitcoin and for ETH over here. On Bitcoin, you can see I've already got the golden cross between the 50 and the 200 EMA crossing towards the upside. And I've marked out the fib levels from the low to the high. This is under the assumption that this will be a confirmed local top and we do pull back. Now, the zones that you would expect price to hold up at in strong trading moves, if this is the beginning of a strong trading move, is going to be the 0.382 and the 0.5 level. So somewhere around that region, that is your shallow fib, right? Coming in at 62,245. Look for price to move up. If you do lose that, well, then the next important zone that you're coming into is going to be this zone over here, which is your 0.5 level at 61,659. And that should be met with the EMAs, which are constantly rising towards the upside. So watch for price to base off of the red one, which is your 50 EMA. When strong trending moves do begin, you would expect that price should hold that and create all of the high lows off of those EMAs trending onwards and upwards. Now, ETH is slightly lagging in terms of the posturing of the EMAs. You can see the EMAs have not yet crossed towards the upside, but nevertheless, we can still use the Fibonacci levels. And what we can see over here is your shallow fib is coming in at $2,469 for Ethereum. Pullbacks into that zone will be important. And just below that, the 50% level of this move is going to be 2,432. So if prices do pull back into those zones, that's your area of interest. That's 3% down for ETH to the first level and 4.6% to the next level, which should meet up as well simultaneously with your 50 EMA. So very quick, rapid show, but just running through this as fast as possible. There is liquidity towards the upside as well, signifying that, if this is a trending move, it's just going to be a matter of hitting that shallow fib at the 0.382 level, capturing some of the downside liquidity, and then immediately chasing back towards the top side. There have been, a lot of shorts that keep getting squeezed out of this market throughout. You can see over here, short squeeze, short squeeze, short squeeze, short squeeze, and that is driving price upwards, right? So you have price holding flat now, you have spot holding flat, you have the leverage traders also holding flat, and open interest is resetting here, and new longs are building at the bottom of that. So what this means is pretty healthy market for the time being. There's nothing unhealthy about this. There's no major divergences taking place between spot futures, open interest, etc. And therefore you can base your assumption that what we've seen over the last couple of days is likely to just continue to happen, right? You're taking the staircase up, right? Just step by step by step, moving towards the upside. And you just got to be careful the open interest doesn't build up too high, because it's the staircase up and then the elevator down. That's where you get those big flushes. But for now, it's still relatively healthy, right? We're watching this level very, very keenly over here on the ETH BTC chart as it breaks down into the bottom of the falling wedge formation. Now, falling wedges are typically bullish patterns, especially when they come into strong horizontal supports, and we're still waiting for the breakout of this. The reason that we have to focus on this and the reason it's so important is because the breakout of ETH BTC will suggest that there's an incoming alt season, right? Alt seasons are where the majority of altcoins are outperforming Bitcoin over a 90-day period, and this is where the majority of your money and gains are going to be made, right? This is where the so-called bull markets that people have come to know and love tend to occur, right? We typically spend 3 years going down in the altcoin sector and 1 year going up. And that's exactly what you saw here, right? The 6th of December 2021 was the exact cycle top for the ETH BTC chart. And then Ethereum underperformed over time, underperformed Bitcoin for pretty much almost 3 years, right? So again, the 6th of December 2024 will be that 3-year anniversary. And then you expect the next year to be an up-only environment, which means you still want to pay attention to what the altcoins are doing. And ETH has broken structures, created a high over here. It came off of these pink zone over here, which is your weekly range low, very, very key significant level. Now you can just watch for those pullbacks, right? Watch for the high low. That becomes an opportune zone to gain your entry, because when Bitcoin dominance does top and starts to break down, ETH BTC will rally towards the upside. And right now you have an inverse relationship, right? You have at least Bitcoin dominance running up in a rising wedge pattern, which is a bearish pattern. And you have ETH BTC in a falling wedge pattern moving towards the downside. And you're looking for at least the change of hands over here for this to break down, and then for ETH BTC to break out and altcoins to rally. And that's what happens next, right? Also covered over here in Whale School is the money flow phases, right? Bitcoin, the money flows into Bitcoin first. We know that Bitcoin surges, outperforming the majority of all crypto assets, barring a few, which we'll get into in just a moment. Where is that? There we go, barring a few, which we'll get into in a moment. And then after that, Ethereum goes back and forth, right? It struggles to outperform and keep up with Bitcoin. At one moment, it's oscillating higher than Bitcoin. The next, it's oscillating back down. It's bouncing back and forth. And then eventually, you go into phase 2, which is Ethereum season. And every single cycle, people think this won't happen, and it does happen. They say that this time, it looks like the ETH killer has come and taken the reins, right? And then Ethereum actually starts outperforming Bitcoin. And then we hear talks about the flippening, which is at which point money starts flowing into other large caps, mid caps, and low caps, and you go into the full-blown alt season, right? That is the phases of the cycle that you're looking for. And if you can time this correctly, you'll make life-changing money. So stay tuned, stay till the end of the cycle. For those of you that have been with me, I'm sure you've made massive profits. At least that's according to what you guys have said. I've heard the commentary of the life-changing gains that you guys have made over the last year or two. So congratulations to all of you. For those of you who have no idea what I'm talking about, or you just want to dig deeper and learn more, please do jump into Whale School. 4 days left, 5 hours to go. Use the link in the description below. Sign up, join us. There's a wealth of knowledge in that course, and we do live workshops where we will interact with you, right? You can ask us questions and we'll help you along this journey. The most important thing probably about Whale School is the community and the lifelong friends that you're going to make, right? That's where you're ultimately going to succeed. So the question is, what are the best performing coins? Well, if you look at this, there's been 42 coins which outperformed Bitcoin this year. And these are the lists, right? I think most of these are coins that we have focused on. So I'm just going to go through very quickly. In a nutshell, what I'm going to tell you over here is that these trends tend to continue, right? So prior cycles, we saw an ICO phase. Then the next cycle, we saw this DeFi summer. Then we had NFT crazes. In each cycle, there's something different. This cycle, it seems to be a mind share that's split between meme coins, which I think will continue to outperform the rest of the market, real world assets deepen, and artificial intelligence. These are the sectors that you want to be focused on. So Popcat, Mog, Mantra, NPC, Marga, WIF, Turbo, ABT, OSAC, Pepe, BNX, People, Velo, Zig, Floki, Banana Gun, Jasmy, Peppercoin, EOS, Pendle, AGI, CKB, Ton, Arweave, DexE, Alpha or Lithium, right? Arkham, FET, we have Vanry, RSR, Core, BNB, ENS, Goming, we have BGB, LPT, GT, TRX, Casper, Rare, and Leo and MX. Now, I've dropped a list of things that I'm looking at least in the Whale Discord, and you'll notice that a lot of what we've been looking at and what we've been trading comes off of this list, right? Well, it's not that I took it from this list, it's just coincidentally that, of course, we've chosen the stronger coins, right? And I think that you'll continue to see the meme coin sector outperform. And then there's a couple, I have a select few that I've picked from the AI sector, which I think will also make a strong recovery. At the end of the day, people are still not bidding any of these coins, right? At least on leverage. Leverage is a metric that you can utilize to see when extreme greed is coming back into the market, and you should probably side on the or err on the side of caution, right? And if you look at this over here, this is showing you that people are way too scared. They're not confident in the market, and that's why you have negative to flat funding rates. That means that they're not willing to borrow money to take trades, right? When people are sizing up on leverage, that's not the way you should use leverage, but it is the way that the reality is that most retail tend to do that. They think if I have $1,000 and I trade on 10x leverage, I can basically borrow $9,000. So I'm trading with a $10,000 account. It's the wrong way to do things, but nevertheless, we can use that to our advantage to understand when retail coming back into the market and when you want to start to be careful. Now, when retail coming back into the market, it's generally very, very short-lived. Like you can see over here from the extreme funding rates that occurred in February, March, and a little bit into April, and then they got blown out. And where's it now? Nothing. There's absolutely nothing. It's completely flat. The open interest has completely dropped off, and in some cases, even gone negative. Look at that. There's nothing on the screen over there. So now's the time to sit forward. Now's the time to pay attention. Now's the time to start to pick out your top coins that you're looking for the next phase as we transition into this zone. And again, I cover all of this and show you the blueprint for how you can do it and fish for yourself, right? I know a lot of people don't want to fish for themselves. If you don't want to, it's okay. Continue to watch the show each and every day. You'll get tons of value over here. Smash the like button if you enjoy these shows. But if you do want to learn to fish for yourself, I'll teach you everything in Whale School, from risk management to support and resistance, candlesticks, chart patterns, ranges and trends, moving averages, how the market cycles work in minor cycles, within bigger cycles, within the macro 18.6-year cycle. I'll teach you how to structure your portfolio based on which part of the cycle we're in. I'll show you how to read volatility, which will tell you where the next major moves are about to come into the market. And then I'll show you most specifically when you're caught within those range or within those ranging markets, how to utilize liquidity to milk the range, right? So to chop between the top and the bottom, buying and short selling, buying the bottom, short selling the top, and making all the money in between. And then the most important thing is, how do you actually put it together? That's covered in trade execution. How do you actually take these trades, right? This is all covered over here, of course, in Whale School, right? And then for those of you who want to go deeper, go into Whale Room, right? Because that's ongoing education from all of the various different coaches as well. Now we can very, very quickly have a look over here. You can see Sui breaking out the top side. Let's just look at the layer ones, because those are typically some of the first to move. Atom still struggling. Casper, we're still in the long trade over there in Whale Room. That's looking really good. It's one of my biggest spot positions. You have Cardano starting to close multiple candles outside the downsloping trend line, whilst coming off of the support level over here. Now, Cardano gets a lot of flack. I'm definitely not a hodler. I don't actually own a single Cardano, but for anyone that did want to make a little bit of money, or you want to exit because your bags are down heavily, then you could be looking for a big move up over here. At the very least, to 45 cents on Cardano, which is a price appreciation of 30%. Now, if you get 30% on Cardano, you can imagine what some of these other coins will do. You have NEAR as well attempting to breach out in the same way Cardano has. You have Say, which is starting to pick up over here. Now, this is the tough part, is you have to ask yourself, is this the start of a new trend, or is this simply just continuing to range where it's going to hit the range high and reject? Well, again, if you do Whale School, you'll know exactly what to do in that scenario. We have Aptos in an inverse head and shoulders formation. appreciation hanging around the top side of here, which is the neckline. The break and close above the neckline at 744 should lead to a move all the way up to 944, which is a price appreciation of, similar to Cardano, 30%, right? So a lot of the coins looking like they may start to put in those 30% moves. Solana has picked on towards the upside. We have TON starting to pull back ever so slightly there. Tron also kind of hanging around here after a big move. This one may cool off a little bit. There was a lot of excitement and hype in Tron. It may need to reset range again a little bit, or even pull back a bit deeper. If it does pull back deeper, the 50% level, which is also your range high at 14 cents, so 14,285, that's going to be an important zone, right? AVAX broke structure, created a higher high for the first time. You're looking for the next high low. So the next pullback will provide a wonderful opportunity for those of you who have been sidelined and waiting. You have also Injective breaking the downsloping trend line, coming off of major support over here. This is personally where I establish a bit of a position, and also just taking you back to the next level of resistance. That's 46% upside move. So all of this is covered, of course, in the course, right? Use the course content below. Also, for those of you out there who want to participate in the Banter Bags giveaway, right? That's also listed below. The Banter Bags giveaway is where we invest into IDO seed round investments that ordinary people can't get their hands on. Yeah, you have to be a VC, right? Now, typically what we've seen is when we put $1,000 into each of these, which is exactly what we're doing right now. This is what we saw in the prior cycles. These bags went up, each bag went up between 50 and 300 extra turns, meaning $1,000 in one bag can go up anywhere between $50,000 and $300,000. Now, we invest into about 20 or 30 of these different bags, which means the value or worth of these is in the millions of dollars. And then at the end of the cycle, towards the end, while the value is still high on these bags, we give them away to you, the community. How do you get into it? Well, you have to use one of these links below. Each link is an entry into the Banter Bags giveaway. Think of it like a raffle. At the end, we'll have a massive Excel spreadsheet with all the user IDs of those of you who have signed up and deposited into those. And then we will pull, pretty much like you're pulling out of a hat, a whole bunch of user IDs, and we'll start to give away those bags to help change some of your lives. So everything is there. Free show, free school, and free opportunity to win the Banter Bags giveaway. I'll catch all of you on the next one. Have an absolutely stellar day, and cheers for now.